This is our Forex blog for January 31st, 2011. And one of the first things you want to start looking at when you're trading is our real-time statistical strength or weakness. Most of us trade the dollar and the yen pairs versus the ones on the bottom. And basically, in a perfect day, we want real-time strength, let's say in the dollar, where the weekly and monthly trend underneath here are super strong as well. And then you want to buy that currency against one of the weakest ones in real time that also happens to have a weekly and monthly trend that's down. For example, in this case, the CAD. Weekly and monthly trend down, started to show a little bit of weakness after about a 3 or 4 hour counter trend move up. And usually when you see weakness in the direction of the longer term trend, that trend's likely to continue. So you want at that particular time to be shorting the CAD versus one of the stronger ones. One of the strongest ones over the last couple hours was the pound. Most of us don't buy the pound CAD. The pound dollar exploded up today. Let's look at the pound dollar for buying around 8 o'clock onward, and also 9 o'clock onward buying the pound CAD. Here's the pound CAD, and you can see this just absolutely took off from 9 o'clock here, broke the high of the day, and the pound was super strong. The CAD had one of the weakest longer term trends. Only downside of the pound earlier in this move was the weekly trend was slightly down, but it just absolutely took off and went up 100, 200 pips. Pound dollar also, you can see all this resistance right here, weekly pivot, 10-day moving average, and if you bought that breakout right here, the next resistance and likely profit target is right here at 65. The market exploded up past that. So, you know, if you bought this breakout right here at 37, it's very likely to go up here to 64, giving you about a 25 pip potential likely profit while risking 5 to 10 pips. Now, sometimes currencies are so strong that they shoot through this and your next profit target's this. If it stalls here, you know, for a little bit, you might want to exit half your trade and then trail the rest. And then it went up to the next resistance area right here, the previous week's high, and it kind of ran out of steam up there. So you might have exited half your trade, or even the whole thing. That's a huge profit. I mean, you made probably 8 to 10 times more than you anticipated in that trade. The dollar was extremely weak, especially at 7, and the weekly trend had shifted down. Earlier in the day, the euro was extremely strong, but the weekly trend was down, the monthly trend's up. Sometimes that happens. You can have a multi-week up move, and then the market kind of runs out of steam and has a few-day pullback. Remember last week the euro dollar was up 7 or 8 days in a row. So this is one of those examples where, you know, it had a few-day pullback, the weekly trend had shifted down, and now it's, you know, resuming the longer-term monthly trend. You can usually go pretty aggressive buying these, even if the weekly trend's down, if the monthly trend's is strong. If the monthly trend's just slightly up and you see real-time weakness here, you know, primarily follow the weekly trend. But again, the euro dollar earlier today, when the euro was strong and the dollar was weak, you know, when it was above the hourly right here, you might have bought this trade right here, exited half the trade at the double top. There's not a whole lot of statistical strength at that time, and then you trailed your stop up to here. You may or may not have bought this little pullback. These support resistance areas, weekly, monthly pivots, previous days, weeks and months, high and low, make excellent support resistance. When it hits an area twice and then, you know, comes back and hits it from above, usually it acts as support. You can see, you know, had mild strength on the way up, no weakness on that pullback. If you had a 50 tick chart up, you might have got into that trade. But then when it broke out of the day, you know, not a bad trade as well, because the euro was consistently strong today. Daily, weekly, monthly trends up. But usually currencies don't go and stay above the upper containment band like this. So, you know, at some point, if you earn these trades up here near the high, you might want to draw your fibs on here and really consider getting out near the first or second fib target. If it hits the first fib target way above our upper statistical containment band, a likely high, and there's not obscene strength, you know, at or above the dotted white line, then you know, might want to exit your trade and also consider a counter trend trade. The stronger the weekly monthly trend is, you may or may not want to do that. And you can also see the euro dollar today at this level was a higher probability short because it wasn't as strong as the pound dollar. If you had gone short the pound dollar up here, you know, you might have had an opportunity to make 10 or 15 pips, but notice just off the charts extreme strength. Now it's kind of running out of steam. You're pretty likely to find a decent counter trend trade up here now because it's way above the upper containment band. Usually when they're 25 to 50 pips above here, they'll pull back. Usually over a multi-hour period, because this is so strong, you're not likely to see selling rush in here. But if you were to short up here, your profit target would be down here at 59.66, which is the weekly R2 level. This is way above the upper containment band, and it might even in a course of 8 to 12 hours, or by UK session tomorrow, pull back and hit the hourly moving average. In 12 or 14 hours, that hourly moving average might work its way up here to 59.50 or even right here. So this 59.66 is most likely, if you look for a counter trend trade up here, a good place to get out. Now, when it was super strong, pretty dangerous to sell it. Now it's up near the highs. It made a higher high with less statistical strength than before, and you can see that incredible strength of the pound is now not quite so strong. Now, unfortunately, the dollar is still weak. If that weakness kind of runs out and you see some strength come back in, even if it's for an hour or two, and the pound goes negative for an hour, you very likely to get 30 to 50 pips on a counter trend right now. Let's look at some of our other charts. Dollar Swiss, daily, weekly, monthly trends down. One of the pretty low risk, high probability trades is draw a fib on an up move, and if it hits that fib target, especially spends a little bit of time there and can't go higher, because the weekly, monthly trend's so weak, you could go short there. If you want a little bit higher winning percentage trades, if you get into a trade and you lose 5 or 10 pips and you get into it again and make 20 or 30, pretty high probability trade. When this breaks underneath the hourly and can't get above it, you might go short here and here, and you can see it eventually fell. When it came back to the hourly again, great place to go short. Pulled back about 20 pips there. Pretty high probability trade. Dollar CAD is actually, I woke up last night and traded from 3 to 5, and I actually got short right here because it wasn't statistically that strong, and it was at one of our fib retracement levels, and it ran up a lot the previous day with diminishing strength, and it didn't have off the chart strength. I used a tick chart to get in here. Unfortunately, I went to bed at 5 and kind of got out of the trade right here near the whole number. It was just going sideways. I didn't want to, the next profit target down was this fib level here. It was only 20 pips. I didn't want to stay up all night just to make another 20 pips, but I made about 14 pips in that trade. Or no, 12 pips actually. When the weekly trend is down, if you see a double top without that much strength, pretty decent counter trend trade here. Actually, I wouldn't take that trade because the NR7 pattern. Usually when the NR7 pattern breaks out, you have a trend. You would have got into there, and it really kind of failed. You might have given it a quick little short when it came back down underneath this major resistance, 10, 20 day moving average or major resistance. But when it didn't pull back that much and you see almost no weakness, you get out. You have to buy the NR breakout again, and notice how our fib level right near the upper containment band made a great profit target. I probably would have got out of half my trade here when it went sideways, and then when it pulled back, probably made 8 pips less on the second half. You never know how long or how far these currencies are going to go. So if the market hits a major support resistance area and goes sideways for 5 to 15 minutes, you probably want to get out of half your trade. Again, notice the weekly, monthly trends up. This came down to our lower containment band. It was the previous week's low. 10-day moving average right here. Pretty high probability place to get in. The trend was obviously down today. Earlier when it broke through the hourly moving average, after spending many hours right here, you might have decided to buy here. Anytime it breaks above the previous, I guess Sunday's high, when it comes back down underneath there, you usually get a pullback. Usually I avoid completely currencies that are stuck between fib levels like this, and then when it breaks out above here, typically you get an explosive move. However, you got the 10-day moving average here, previous month's high, weekly pivot, and another fib level. So there's very high, likely high probability selling areas above here. So that's one of the ones that I avoided last night, although it did work. Last night the euro was one of the strongest pairs, and the yen was weak. And so when you see this, at least on a scalping basis, you want to get into a trade and shoot for 10 or 15 pips. Sometimes, like you saw last night, they take off and move even quite farther than that. Pound, was going sideways for late Friday and Sunday night. Came up to the hourly and had some resistance. The weekly trend was down, but you can see there's clearly not much selling. There was a lot of selling on Friday and then almost nothing. And when this thing broke out here, this was a potential profit target, and so was the 20-day moving average. At the time, the weekly trend was down, so you might have got out of your trade right here. I don't typically exit half my trade when the weekly trend's against me. If I buy a breakout right here and the market kind of stalls at one of these levels, I'll either exit the whole thing or at the second one if it's just slightly above. I wouldn't have been really looking for any buys on this pullback because the weekly trend was still down. There wasn't obscene strength. But when an area gets hit once, twice, and the third time, and there's no decent pullback after that, at any of those times, quick little 25 pip move down, 25 pip move down, 25 pip move down. There's clearly buying right here. You want to buy the breakout. The third time it gets hit, here is your initial profit target. So you were, risking about 10 pips to make about 20, and you can see in this case it just took off, and the strength once you're in that trade just kept getting stronger and stronger and stronger. The pound dollar, or I'm sorry, the pound dollar and pound yen were some of the strongest pairs today. This is a decent example of the weekly and monthly trends down. You don't want to buy when the longer term trend's down and there's resistance there. I don't really see any trade I would have taken in this. Doesn't meet any of our criteria. This one has not really that strong of a weekly or monthly trend, and it's stuck in between all these fibs, and that's what oftentimes happens. If you're a really aggressive trader, you might have sold this 2-hour sideways range right here, but it just, I was watching this last night. I didn't look like a trade that would give much of a high probability because there's major support underneath it. Every once in a while, by following the rules, you miss a big move. However, you also avoid a lot of losses. Here's the dollar yen. I typically avoid this one. It has a pretty tight 15 pip distance between these Fibonacci areas, and typically you have very low movement, very choppy action when it's in between there. CAD yen. This one has a weekly monthly trend that's very weak. You can see it just for hours and hours it went sideways. Usually 2 narrow range 4-hour patterns in a row breakouts work, but we're underneath the hourly. So when you're underneath the hourly, you mainly want to sell the low here. But anytime you have a false breakout and it comes back down and doesn't break the low, when it breaks the hourly right here, you might have gotten in this with this as your profit target up here. It's about a 20 pip potential profit. Now, if you're in a trade and it kind of goes sideways and you're in a weekly trend and monthly trend that's down, exit with 5 or 10 pips and just be happy you're out of it. And if it comes up to a resistance area like this without much strength, or it kind of pulls back right here, notice it's all red right here, weekly, daily, monthly trends down, real-time trends down, great place to go short. And the hourly is a potential profit target. If it breaks the hourly, this area right here, you might have got out of half. This is a 25 pip pullback, so I more than likely would have been out somewhere halfway back up here when it started to resume its trend, because all the time frame trends line up. You want to go short again, and this is your first profit target, second, third at the fib level, and it hit that level and kind of ran out of steam, and you'd be looking to get out of the trade right there. Very high probability trades when everything is in your direction. Daily, weekly, and monthly and real-time trend all match up.